What is going on, everybody? And I hope everybody is doing well. In this video, we are talking about technical analysis, my entries and exits for the week. I pair this with my other weekly analysis on current events that are currently happening during the week, whether that is earnings, whether that is a FOMC meeting. But I use that and I pair that with my technicals to allow almost precise entries and exits and understanding when to apply risk and how much. So if that sounds like something you're interested in, consider subscribing. I also can be found on X at Hemming137 as I do provide daily memos on what the current economic environment looks like for that day. So check me out there as well. So let's go ahead and get started. As of right now, we have been on this struggle to grind up as much as possible with a lot of manipulation. I've talked about that in my other video. But with that being said, let's try to keep this as technical as possible and not talk too much about what else is going on, the current events. There are a lot of events going on, especially because you are in an election year. You're essentially in the last couple days of the election, last month of the election. So that's going to be extremely critical with what's currently going on. With all the hurricanes that are occurring as well, you have to understand supply and demand could be dramatically affected, which could draw concerns about inflation as well. So that's something else you have to keep in mind. So technical wise, as of right now, our ceiling here is kind of sitting roughly around that 57.67. Now, I haven't made this a zone yet, again, because you are in price discovery. We need the structure to build out more. When you start getting in price discovery, it's kind of rough. You got to let a couple weeks pass to really establish zones like you see here. Like this is a solid zone here, which is essentially our support right now at the 56.16 mark. So kind of really watching that coming into this week. Again, we are coming into earnings week. So over the next couple of weeks, we're going to get a lot of news that could potentially break this either way. Plus, also, we have the election. Once the election is done, then I think that will really dictate, and the manipulation won't be there as much. So just keep that in mind. But as of right now, expecting this to attempt to try to go to 600. But again, my big problem being is that you're going to get a lot of bad earnings, which could essentially keep us in this range. This is why I said you have to go by psychological numbers when you are in price discovery mode. So looking at the 5,800 level, the 5,900 level. Again, end of year, we could touch the 6K mark. Again, really just depends on what happens between now and the end of the year, the election, what major events are going on. As of right now, for anything scheduled, we are looking at not only election, but we do have essentially core this week, which again, not really concerned about that until a couple months later, once a lot of these supply chain issues start occurring, then you'll probably see potentially a rise of inflation again. So that's something we need to keep in mind. So with that being said, this week, again, expecting potentially starting to push up a little bit more, attempting for the 58 is what I'm expecting. Again, if the core is bad, which I'm not thinking it will be because we are way too close to the election for anything bad to drop. So I think the manipulation will continue. I think this thing, if it can break the 59, again, looking for psychological numbers, the 59 would be the next obvious thing. So look, that's what I'm looking for here. Again, we got very strong support roughly around here, 56. Now you have to understand, because of the manipulation, even though this seems technical wise a very solid support, if some really bad news drops, this thing can straight sink down to essentially the 55. We got a lot more support around there on the daily. On the 20 and the 50, so you got a lot of support down there. But again, if the event is much larger than what the support is, it'll straight snap this pretty easily. So this is why you need to be aware of events, is technicals. When you have specific events like this, again, the end carry trade, it broke straight through support. It didn't matter. So those are things you have to pay attention to. If an event occurs, it kind of overrides any kind of technicals that you're seeing. So with that, that is the SPX. Again, let's take one quick draw out everything. We're still kind of in this very narrow channel as of right now. We'll see how this does play out. Again, expecting this to continue to grind up towards the back half of the year. Once the election's done and we get into the new year, You're going to have to deal with port strikes. You're going to have to deal with essentially the true numbers for unemployment, which are going to reflect really, really bad compared to what was kind of what we got before about the 818 revisions. Again, you have to understand that wasn't official numbers. So the algorithm feeds off of, again, headline news, but very specific headline news that it's read from a lot of these major news outlets. So you do have to keep that in mind. But as of right now, again, still correcting. If we corrected today 42%, you're still looking roughly around that 3,200 mark. So if we do price in a recession, odds are heavy we could go down that low. Again, depending on who's in office, I think could really dictate how this can play out. I think some strings will be pulled more than others, depending on who gets in there. I think it could be just, again, not trying to make this political, but if it's Trump, I don't think any strings will be pulled, and this can be full out sell-off crash. Or if it's Harris, it might be a little bit more controlled crash if possible. Again, you have to reflect what's going on in China and what's going on in Europe right now. That, again, they've introduced billions of dollars into the market, and it didn't even help that it was so bad that they had to start dramatically cutting rates to stimulate the economy. Something we could be seeing, although they're going through their Lehman Brothers episode right now. But again, ultimately understand we'll have some level of that and understand that the amount of manipulation. This is why I point to a lot of the earnings and stuff, because they reflect what I talk about as opposed to what is essentially just being discussed out there through the talking heads in the media. So that's what we got there on SPX. Let's take a look at Bitcoin. Bitcoin, again, playing this downward wedge here. It is getting some support here, roughly around the 62.90 or the 63K mark. We'll see if we can hold that. Again, I think we could have a brief pop up to try to attempt to go back for the all-time highs here. But again, ultimately, I think what you're going to see is this revert back down and start challenging back at the 45. I think is what the potential is. Again, if we break this, we want this to hold above solidly on that weekly. But anyway, it's playing pretty choppy. The rest of the market is pretty much like this, but expecting one last big dip. Again, I think we price in a recession. This thing could wick down to 35. And then, like I said, if it does make it down this low, I think the lifespan of it staying down that low is probably pretty low. Now, one thing to mention about Bitcoin is HBO did talk that they know who the creator of Bitcoin was, and if that news drops, it could have a play and essentially revert this back down to the 51. So we have to see a Tuesday when that drops what that may entail for actual Bitcoin, depending on who they say it is. So we'll see what happens, but nonetheless, as of right now, like I said, right now it's holding support. It's essentially got rejected off this top line. So if it can't reclaim 78 by the end of the week, that could be a problem. More than likely break down if that's the case, and then head back towards the 52. Again, it can start creeping a little bit lower once we press in recession. Again, everything's fair game at that point, so you have to be very careful. Again, before you make a new high, a lot of times you'll dip back down, and your low point could potentially be the 40. So you could see 44, maybe, like I said, maybe even the 35, but it may wick straight out of there and then start ripping back up. So typically it breaks structure dramatically, and then it rips up to the other opposite side, so it can essentially tag everybody out and get them out of their positions. So this is why they always say DCA is important, because moves like this happen, so it scares people, so everybody sell, and then it shoots up at that point. So we'll see what happens with Bitcoin. Bonds, something I said you need to really pay attention to as of right now. You have to understand that with all the falsified numbers that came out on Friday, it's putting more sell pressure back on the bonds. You have support here roughly on the 93. But ultimately, still expecting this to explode up when we start doing more massive panic cuts, which will happen. Again, all will happen after the election. You have to understand everything is being done to prevent people assuming that something as bad is currently happening. And again, they've stopped reporting about a lot of things, and they're manipulating reports and getting revised. All these things are out there in the public. It's just not advertised. So that those are things you need to keep in mind. So again, this should be a pretty solid support at the 93, but ultimately, I think again, this thing could start ripping up. Once the election's done, you'll start getting a better taste of what actually is going on with bonds. But bonds is still something I think you really need to be paying attention to, along with oil. Oil is already starting to revert and starting to push back up. Bonds, however, is not, because a lot of the other falsified data that's currently going out there. So we'll continue to watch that. Let's take a look at Tesla. Tesla is right on the cusp of, I've been talking about Tesla since it's been back here in the 170s, 165s. But ultimately, right now, it's building up because it's got the big robo-taxi stuff this week. So do keep that in mind. I believe it's on Thursday. It's on the 10th. So do keep that in mind. If that does occur, see if we can look for a breakout for the 265. It does. Again, your ceiling's really been around that 320 has really been a hard ceiling right now too. If it's really, really amazing news, this thing could really start ripping. So just keep that in mind. But ultimately, playing this right now, your current support is sitting at the 235. But if it breaks that, like I said, you have this trend line that could potentially provide some support as well. If that does happen, or it could turn over. So price action this week after the news will be important, especially again this level, this 263 mark. So really kind of watching it there. If for some reason we break this trend and start diving down, our really big support is around the 200 and roughly around the 175. But you're going to need a massive catalyst to start getting Tesla at lower levels below 200. I think at this point, because I've talked about all the way to this point, is you have FSD and you have humanoids, which could potentially drive this to new highs. But again, you have a recession that needs to be priced in. So, and you got to, Elon isn't too popular in some particular polls. So you have to be careful about that too. Depending on who gets in presidency, this stock could be really impacted too. So there's a lot more risk than normal, I think, on Tesla. So you do have to keep that in mind. Palantir, again, another great stock. We talked about this stock since it was at 750. Now it's at 40. It's in price discovery mode, just like the market. So once it actually starts to correct, right now support is the 36 mark, the 37 mark here. If it does break this, you have support at the 33 and then support at the 27. So at this point, when you're really kind of just looking for is any kind of pullback. Again, I think this is a great stock. It's one of the very few use cases that actually have a significant use case for AI. So even if you correct, see it's making these massive moves. Even if you correct 75% and look at anything at under 30, maybe a good grab. We'll have to see how this stock reacts when we start talking about what it's looking like for a recession. Once it starts to get priced in, that typically comes with a lot of panic selling from, again, the Fed and cutting rates. So Amazon looks like the struggle bus. It looks a lot like a market starting to it's still at a higher low here. Let's see if it can make a new higher high here and reattempt for the 200 going into earnings. That would make sense. But if it keeps getting rejected here and can't reclaim this during this week, could be looking at the 176, which is not a good sign. That would be a higher low. And then we could start making its way for a new lower low at the 145. If that's the case, Amazon's still always a good grab if it continues to go lower, but we're looking for things to start selling off even more. So let's kind of, we talked about PayPal. Like I said, I talked about PayPal all along this way when we were dipping at the 58. Now it's at 80. Hopefully you grab some before then. But no, right now it's getting a little too high in my opinion. Looking for this thing to retrace a little bit. I don't know how much it's going to retrace. You probably missed your buys around here at the 58. Price in a recession, you could maybe see it back around the 66, maybe back into the zone. Again, nothing is for certain. This is why you can't go too far ahead. When things are in danger mode is when you buy stuff, not when it's running up like this. You wait till it corrects again, kind of bottoms and establishes like a nice consolidation like it has been over the last couple months. So These are some big buys here that I'm looking at. I've been talking about this for a while. I really like Elf, the growth rate. Again, it wasn't at 70% like it was when it was hitting 200. It's still amazingly at like 45, 48% growth rate. Still doing tremendously good going into the holiday season. I think this one will do phenomenal. These are the times you want to be buying, not when it's rocketing up. You don't want to be buying up here. You want to be buying at these lower levels. So anything between essentially 114 down to the $88 level, I think you got some. As long as it's going to hold the 88, I think it's priced in good for a recession. All you need is one good earnings, which you got one at here on the 11th, 11/6. So November 6th. This has good earnings. If it has great earnings, I think this thing will start rocketing back up and very quickly. So if you're not buying between now and then, again, this financial advice, I highly suggest you check it out. But as of right now, these are the ones you want to be buying, not the ones that have been rocketing up and then buying up here for it to correct. So again, really watching these key levels here at the 13 and then again the 88. So big span here, but again, understand this ultimately more of a longer swing. So just been consolidating around here, adding shares around here, and then when it starts ripping up, just hold it for the longer play here. Celsius is another good potential play here. I've been looking at this and gathering some shares here. I think this one can really do well. Again, it's corrected very heavily. Massive correction, but as you can see, there's great support here at the 29. Really huge support here at the 16, although that is a huge drop. We'll have to see how, when you price in a recession, what this really looks like for here, but I think it can still do very, very well in the future. Now, this is a new one I'm really looking at. I've always liked restaurants, but the key is trying to getting on restaurants early, like a Chipotle. Something that is vastly growing. Some of the biggest stock gains have been on the food industry, but it is very hard to find a good franchise in the early stages. And this is one I believe that could be a very good. Porcello's is a very good one that could be for just that. Now it's big in the Midwest, especially around Chicago. They're building a lot of new franchises in Texas, and then they got a big representation, I think, in like the California, Utah area. Nothing really on the East Coast from what I'm aware of, but again, very people love this. Is burgers and hot dogs and salads. So a lot of just like finger food favorites, but they make it an experience, and they have chocolate. They're known for the chocolate cake. And so with that being said, and I believe it's in a TV show as well. So there's a lot of hype around this particular restaurant. I think it's at good numbers as of right now. So I'll be looking to be buying shares of this. Would really like it around this particular area. This is almost like a double zone down here. This would definitely be a great buy, anything under 10. But it is right now, the resistance right now is roughly around that $14 mark. So buying lightly up here and then buying more heavily down here if it gets around that $10 mark. But I really like this one moving forward for a longer swing. This is more of a longer investment. I have some that even like Planet 13. I buy shares of this all the time, just around this level. I think it's a 50-cent mark. Again, I don't go all in. Again, none of this financial advice. You don't know. This is still very early stages and going in a recession. They've made it through the pandemic very well. These ones you really have to focus on the fundamentals of the company and understand there's big risk when you get stocks that are this low. So you have to keep that in mind. So I'm not saying throw your life savings in these, but you can put a good chunk on these and bet on these, and they could make a world of difference. And that's why I like these two, Planet 13 and this other restaurant as well. I think I do very, very well moving forward. So that being said, let's get into some of the other stocks that we're looking at. As always, we still want to look at BA and give us an idea of where value is at. So again, BA, we don't know why it's still sitting at 155 with all the news that it has, but again, heavily manipulated. Is getting some support here around the 150 mark. Looks like there is kind of a double, maybe even a double zone here that is sitting on top of each other at the 156. It's kind of finding support here. Again, I'm not a huge fan of this, but it doesn't sell off dramatically. It always has horrible earnings. and yet for some reason it's still at 150. So with that being said, we'll continue to watch and see what happens with BA going forward. Although it does look like it's consolidating, so we'll see. Current resistance right now is at 167, and then again basing at the 150. So, and then let's take a look at JP Morgan. Now this one again, resistance is roughly sitting around the 212. They're expecting a big move this week, potentially even one of these candles. So if we get another big sell, you definitely want to be watching this $200 level. If it breaks that, it could be a big problem. So we'll have to watch and see what happens this week. Again, it only moves normally about $4 to $5, probably more around the $4 mark on average. So the fact that it's they're pricing in an 8, they're potentially expecting a big candle like this could come. Again, this is the industry leader, so if something bad happens with JP Morgan, it's going to be worse for the rest of the banking industry. So that's something you need to watch. And then let's bring up oil. I've been talking about oil for a while now, but it is right now it's retesting some resistance. So this week will be critical. The thing is OPEC, you have to understand the news, is oil is heavily manipulated, and OPEC tried to save oil when it was hitting around this level, obviously did not, and started selling off. Then we started talking about war, and it's starting to push back up. Now this is a very critical level for oil. It needs to break the 56. Now, if you look at like ExxonMobil, it's held at the 117 mark here, is starting to break out. But Oxy, this is one that Warren Buffett is heavily invested in, I think roughly around this $65 mark. So we'll see what happens here. So it needs to break above this. I think it will gap above this and start pushing up. Since we're starting to cut, there's a lot of supply chain issues, and oil being a big front runner of those things, I think can start pushing this back up. My price target for this is really, I think we can start hitting back up this upper level at the $100 mark. Again, pandemic really had some massive falling off a cliff here, but which if you would have bought around there would have been pretty crazy. But nonetheless, we'll see what happens here. I think this thing is going to turn and start pushing up. It does provide a dividend. So for me, this is definitely a longer swing, but definitely just something to keep on the map of the next couple months on how that's going to play out. And then one other thing I'm really looking at is we are looking at some uranium plays. Now we did have a retest back at the $2 mark here, or I should say the $4 mark here just recently. We'll see if this is a higher low, but if this starts getting down rough here around the $2 mark, definitely want to pick up some uranium because of, you may ask why uranium, and I'll ultimately understand right now. Nuclear plants, they just, I know Southern Company has been dealing, or they just essentially started a new nuclear plant. Then you also have a couple other nuclear facilities that are being reopened by Microsoft in Michigan. So nuclear energy is what is going to have to be used for powering AI. And so this is why I talk about resources. And so uranium is going to be huge in the future. So any of these dips, you definitely want to be watching. I do believe the CCJ also mines uranium as well. So this is something we definitely want to be looking at. It did have a recent pullback to the 38. This also provides a nice dividend. So it does pull back. Anything below 30 would definitely be a pretty heavy buy as of right now. But just really keep some of these levels on watch moving forward. So if you made it this far, I appreciate you. Go ahead and drop a like. And until next time, I'll see you guys later.